All right, so based on our last class, I spoke about the tree structure of the markets, which is the uptrend, downtrend,
Uptrend, downtrend, and the ranging
and the
trend.
ranging markets. All right, Rebecca, you weren't present, but I want you to know that once you open your charts, all right, once you open your charts, there are three structures
Yes.
in the markets. You have the uptrend, you have the downtrend, and a ranging markets. All right, and each of
Yes.
this structure has their formation. They have their formation in which you can identify them with. All right, you can identify them with
Yes.
their formation.
Yes.
Now, so we're going to start with the structure of an uptrend, right? You can actually mute your mic so that I won't be distracted with the noise in the environment.
Okay.
So we have the uptrend. Now the uptrend is made up of a series of higher highs and higher lows. All right. The uptrend is made up of series of higher highs and higher lows. So the uptrend looks like this. This is an uptrend where we have series of higher highs and higher lows. So these are the highs. These are the highs. All right. And these are the lows. These are higher lows. So this is called a high, and the next high is called a higher high because it's higher than the previous high. This high is higher than this because it's higher than the previous high. So these are highs. All right. When you progress, you say high, higher high, higher high, and higher high. All right. So that is it. Now we also have the lows. All right. This is a low and this is a higher low. The reason this is a higher low is because this low is higher than this other low. So as you progress, this is a low, a higher low, and a higher low. So with this formation, we have an uptrend. So the only way you can identify an uptrend is when you have a formation of higher highs and higher lows. All right, are you following? When you have a formation of higher highs and higher lows, that is for an uptrend. Now, for a downtrend, I'm going to clean this. For a downtrend, I'm coming. Hold on. All right, so for a downtrend, you have a formation of lower highs and lower low. So a downtrend looks like this, where you have a high, a lower high, a lower high, a low, a lower low, a lower low, and a lower low. So this formation makes up a downtrend. A formation of lower highs and lower low makes up a downtrend. I've already shared this with you guys before. So the formation of lower lows, and lower highs makes up an uptrend. Now, the last but not the least is the ranging markets. The ranging markets. So the ranging market has equal highs and equal lows like this. The ranging market has equal highs and equal lows. So whenever you open your chart and you find a market like this, you should understand that the market is ranging. Okay, it has no specific direction. It's neither up or down. So a ranging market has equal highs and equal lows. That is just for the ranging market. So I'm gonna just I'm gonna draw the tree structure on the screen. I'm gonna draw the tree structure on the screen, starting with an uptrend, all right? So this is an uptrend, and this is a downtrend, all right? Sorry for the drawing. This is a downtrend. And finally, we have a ranging market. So this is a ranging market. Now, this is an uptrend, this is a downtrend, and this is a ranging market, all right? So I'm just going to recap. An uptrend is made up of series of higher highs and higher lows, and the downtrend is made up of series of lower highs and lower lows. all right? Why a ranging market is made up of series of equal highs and equal lows. So these are the two formations you will see on the chart. So whenever you open your chart, see that the market is an uptrend or a downtrend, or either the market is ranging. All right. So these are the three structure you always see on the market. Now remember, I'm showing you guys how to analyze the market. All right. So the first thing you need to do is identify the trend of the market to know if it's an uptrend or a downtrend, or to know if the market is ranging. Now, once you're done identifying the trend of the market, the next thing is to mark your key levels. Now, there are important key levels in each of these structures you need to mark. All right. When you identify these key levels, the key levels are areas of opportunities where you can buy or sell from. All right. The key levels are areas of opportunities where you can buy or sell from. So I'm going to start with the uptrend. Now, for an uptrend that has a formation of higher highs and higher lows. Now, there are important key levels you need to pay attention to. All right. So the key levels you need to pay attention to are, the key levels are the previous high and the current higher low. The previous high and the current higher low. So these are the two key levels you need to pay attention to, because you're expecting the market to either come back to this zone and you're expecting to see a reaction from this zone. All right. Once you see that reaction, it can be a candlestick reaction. It can be a weak rejection, okay, which will enable you to know that this market will buy from this point. So from this point, you can look out for buy opportunity. But if this market fails to respect this previous high and it goes down to this previous higher low, you can also expect a buy from this zone. As a matter of fact, there are high probability that the market will buy from this higher low. All right. Personally, I love buying from this higher low. From this higher low, that is where you get your order block and so on. All right. So point, from this point, you can actually look at for a buy. So these are the two areas you need to pay attention to whenever you see that the market is an uptrend. You pay attention to the previous high. This is the current high. You pay attention to the previous high and attention to the current higher low. That is for the uptrend. All right. I believe you guys are following. Please unmute your mic. Unmute your mic. I believe you guys are following. Unmute your mic. Rebecca and you guys are following, right? Rebecca, I can't hear you. Your mic is still mute.
Yes.
All right. How about you? Best, are you following? All right. Go on and mute your mic so that I can proceed. Okay, now that is for the uptrend. Now for a downtrend, the important key levels you need to pay attention to for a downtrend. This is a downtrend. The important key level you need to pay attention to for a downtrend, all right, for a downtrend is the current lower high and the previous lower low. The current lower high and the previous lower low. So these are the two areas you need to pay attention to for a downtrend, because you're expecting the market to pull back to this point. Now, if you observe, if the market should pull back to this point, you are expecting to sell from here. You are looking at for reaction of the market at this point. So if the market should react at this point, then probably candlestick formation, weak rejection, you can now say that this market is going to sell from this zone. Then you can now look out for selling opportunity. Now, if this market fails to react from this zone, another zone you need to pay attention to is the current lower high. All right, the current lower high. You have to pay attention at this zone. All right, so you look at for reaction in the market, then you cannot tell if you're to sell from this point. So these are the two key levels. These are the two key levels you need to, pay attention to during an uptrend. All right, for a during a downtrend rather. Now for an uptrend, I'm going to repeat myself. For a downtrend, you pay attention to the previous high and the current higher low. Why for a downtrend, you pay attention to the previous lower low and the current lower high. So those are the two areas you need to pay attention to. Finally, but not the least, a ranging market. That one is quite simple. A ranging market in a case where you have a market like this, and equal highs and equal lows. The areas you have to pay attention to, it's this point, all right, the lows and the high. Probably you're looking to sell from here, or you're looking to buy from this point. So if this market should, if this market should get to this point, you're looking to buy, and if the market should get to this point, you're looking to sell. All right, so those are the two key areas you need to look at for buying or selling opportunity during a ranging market. All right, so I'm going to give you guys a live example on the chart. I'm going to give you guys a live example. I'm going to share my chat screen with you guys. Then we are done for the day. All right, so I want to believe you guys, you got what I'm saying, right? You got what I'm saying.
Yes, sir.
All right. So I'm going to share my chat now. I'm going to share my chat. Okay. Can you guys see my chat?
Yes.
All right. Now this is Euro USD. Okay, this is Euro USD. The 4-hour time frame. The 4-hour time frame. This is Euro USD. Now, as you can see, this is an uptrend. You can see clearly, right? This is an uptrend. Why is this an uptrend? Because it has a series of higher highs and higher lows. All right, these are the highs. All right, these are the highs. Let me take my time to mark out the highs. These are the highs. These are the highs. All right, these are the highs. So you can see clearly that this is an uptrend, and these are the lows. All right, these are the lows. These are the lows. Now, I want to start analysis on this pair. I want to analyze this pair. The first thing I need to understand is the trend of the market. Now, this market is an uptrend. You can see clearly where is best. I think his network is disturbing. Don't worry, we're going to send him the recorded version of the meeting. So, or should we wait for him? Oh. Best. I think your network
Sorry,
is.
sir. Next.
All right, yeah, it's
Yes.
fine. It's fine. So I want to start analysis on this pair. As you can see clearly, this is an uptrend, all right? This is an uptrend. Please mute your mic, best. Mute your mic. All right, good. As you can see clearly, this is an uptrend. The reason this is an uptrend is because it has a series of higher highs and higher lows. Now, the next thing I need to do is to mark my key levels, all right? I'm going to mark my key levels. Like I told you guys, for an uptrend, you have to pay attention to the current higher low, which is this. This is the current higher low. And you also pay attention to the current, sorry, to the previous higher high. Now, the one on pink is the previous higher high, and the one on is this brown, and the one on brown is the current higher low. So these are my two areas. Now you can see that the market has violated this high, which is to say the market is not respecting this high. So we are looking at to buy this market at this low. We are looking at to buy this market at this low. Now there's every possibility that this market can continue from this zone, all right? The upward movement, okay? But a good area to buy this market, regardless, a good area to buy this market is at this current low. So if we can be patient enough for this market to get to this point, then we'll look out for a buy. Once we buy from this point, then we can now put our stop loss somewhere below this other low. So a good area to look at for a buy is at this point. Although we don't know what the market has for us, we just have to be patient enough until the market gets to a good key level. So this area is a good key level to wait for a buying opportunity. All right, is a good key level to wait for a buying opportunity. And again, I don't think this high has been violated. Okay, this high has not been violated. These are weak. The closing of this high is at this point. As you can see, the market is still at this high. All right, the market is still at this high. These are the weak. These are the closing of this high. So this market, we are looking at this point. The market can actually buy from here. I just want to see the reaction of the market at this point. But if this market fails to respect this zone, another good zone to look at for buy opportunity is at this point. All right, so this is for an uptrend. This is for an uptrend. Now let me look at for a downtrend. Let me look at for a downtrend. Let me check NZD pairs. Uptrend, uptrend. Okay. Now, this is another good example for a downtrend. This is another good example for a downtrend. Now, you can see that this is a downtrend because we have series of lower low and lower highs. This is a high. This is another lower high, another lower high. All right. Now, we have a low at this point, and we also have another lower low and another lower low. Okay. So I'm just going to clear this again. Now, I told you for a downtrend, the key level you need to pay attention to is the current high. We can see this place as a low or the previous lower low. So this is the previous lower low, and this is the current high. So we're expecting this market to either react from this point, all right, to either react from this point, or the market reacts at this point, okay? This would be a good place to sell this market, all right? This would be a good place to sell this market. So you guys have to be patient enough for this market to get to this point. This is NZD-JPY. You guys have to be patient for this market to get to this point. Then you can now look at for a sell opportunity at this point, all right? You can now look at for a sell opportunity at this point. The market can also respect this point as well, but preferable, I would say wait for the market to get to this point before looking at for sell opportunity, all right? In our next class, I'm going to show you guys the change of structure, shift in structure, and so on and so on, all right? But what I want you guys to understand now is how to identify these key levels. The first thing you need to do is to know if the market is a downtrend or an uptrend. Once you know that, the next thing is to mark your key levels, all right? So these are my key levels. So I'm just going to wait patiently for this market to either get to any of my key levels. Then I wait for the reaction of the market before selling the market, all right? So this one is for the downtrend. Then let me look for a ranging market. A ranging market. I think this would be a perfect example. Let me just zoom in with this. I just need a perfect okay, let me go to AD pairs and check. All right, let me use this. Now, this market was ranging at this point. This market is ranging at this point. You can see that the market is just going up and down, up and down, up and down before it broke this zone finally. All right. At this point, the market was ranging. So you can actually buy from here, sell from here, buy from here, sell from here. All right. So because the market is ranging, it has no specific direction. The market was ranging at this point. So this would be a good place to buy from and a good place to sell from. Okay. So that is for the ranging market. You guys have already wasted my time. We are supposed to start this class by 4, but we waited till 5. So I'm going to round up now, and I'm going to share this video to you guys so that you can go and rewatch for better understanding. All right. Now you guys can unmute your mic. If you have any question, just quickly ask so that we can be done for today. Unmute your mic. Any question? Rebecca and Cole. Best. I can't hear you, Best. You're speaking. Oh. All right, it's fine. I'm gonna share this video to you guys later on. All right. So you guys can go through it and we'll continue in our next class. See you guys.
Thank you.
All right.